Hello, folks, and welcome back to another edition of Money in Motion. Joined here with Monte, and the DXY continues to rip today, up about 60 basis points. And, equities came out a little bit strong, starting to sell off a little bit now. Excited to go over some of the COT data and positioning that we've seen shifted since last week. But NASDAQ still remaining green here today, despite dollar being very strong to start the day. Also, Monte, before I pass things over to you, have to talk about metals and just the metals crashing in. Go ahead. No.
Yeah, I was gonna say, you did that whole intro and you didn't even say the word Bitcoin once. What were you?
Well, yeah. I mean, I'm trying not to jinx it, I guess.
Yeah. What's up to everyone in the comments? Ryan, nice trade, my man. Good stuff. Hello to all. But yeah, I mean, Bitcoin. Look at this 15-minute chart real quick. I just want to pull this up. It's pretty funny looking. I think it's worth noting. But this is the 15-minute Bitcoin chart. Now, what's interesting about moves like this, when we get a big move in a 15-minute period, is that everyone comes in and they operate under the assumption that, okay, this move happened with little to no resistance and therefore is going to retrace with the same velocity. That is a very common misconception among crypto traders. And you can see it coming down now. Of course, this is in correlation with the NASDAQ kind of pulling back a little bit on the 15-minute. It was looking strong here, like it was breaking higher, but it's pulling back into this range now in the last about 5 minutes here. And Bitcoin is following suit. Now, this is a big bearish engulfing candle. However, I do expect us to find some support right in the middle of this range here. And along with that support, I expect us to grind higher. What I think is the most likely scenario for Bitcoin here is we see a bunch of people come in, they say, oh man, like this is like, if you're a bear, if you're trying to short the market, you look at this and your mouth starts to water and you're like, oh man, I'm going to short this thing back all the way down to 27 and I'm going to be sitting pretty. No, you're not.
Because it could be, that is not like the worst setup. Like, it's not like there is a bearish case to be made.
Oh yeah, no, 100%. But I'm saying,
you're just saying that bears have zero IQ because they want to short something because of mean reversion. Mean reversion is not like the worst strategy of all time.
No.
Anyways, just
no. I'm not saying because of mean reversion. This has nothing to do with mean reversion. I'm talking more about the fact that people see this move, they expect a retracement, and I'm talking about the positioning of the traders. If we take a look at CoinGlass, where's Bitcoin? So people are getting short, and I expect this number to continue to increase over the next couple of hours here. So with people shorting Bitcoin and expecting this retracement, I think we grind higher. That's just the way I see it. I don't mean reversion is a valid thesis, sure, but I think that what's going to happen is a bunch of greedy traders are going to pile in, try and short this below, back down to these levels. They're going to get squeezed out based on the fact that that's an overcrowded and obvious trade, and we're going to continue to grind higher. So I'm still bullish. I think we're going to go higher just on the basis of the fact that bears are going to get squeezed out. But it seems as though you disagree.
I don't disagree. I just don't I don't know. I just kind of disagree with your characterization of the market saying like it's only greedy bears who are just stepping in to short. It's like it's not the worst like positioning. I mean, risk assets are kind of
all right. Then short it.
Points. That's not what I'm saying. I'm just whatever. Sorry, let me bring up some charts. It's taking me a minute. Yeah, so I mean, all I'm saying is just there's like a lot of risk off like positioning in the markets in terms of like ES and stuff. Like you have seen like when if you look at like actual positioning in Bitcoin, like a lot of like futures are actually long, but forget Bitcoin, just like ES, most people have been, or in terms of like large speculators and retail speculators, most are continuing to buy this dip, at least in the equity markets, without much success yet. Now, if we look at things like Nasdaq, Dow, and Russell, they're a little bit more uh, like even or neutral, but ES is got the most open interest out of all of these indexes, and therefore, in my opinion, while the Nasdaq will lead in certain points, ES, you can't ignore that amount of cumulative open interest, and people are still buying into this dip with not a lot of success. And I am long coin, like I have long exposure to the Bitcoin space, so you know, I'm not saying that like I'm not bullish. I'm just saying, like, I do think this is kind of a state where the market is still somewhat vulnerable, at least when it comes to the equity markets, because so far, like, we just haven't really, like, retail hasn't, and large specs have not been able to push price higher with much success. Um, and even now, it's starting to become popular. You hear the people who were bearish on CNBC all the first half of this year are now saying, I can't wait till we get to 4,200 so that I can DCA. And, the market will usually not allow people like it never makes it easier, or very infrequently will make it easy for like the collective. So that's just kind of what I'm saying, and some certain things and like what I'm seeing. Also, like the dollar just continues to get bid. Something that is interesting though, that is starting to shift towards the opposite way. What's up?
That's a crazy change in the oscillator there, down to zero.
Wait till I show the euro. But anyways, there's been a lot of short covering in this position, and a big rush to get long as well in the last couple of weeks. What we've seen in terms of large,
Yeah,
like that's a very, very drastic move on the index base. So we'll see if we start showing some weakness here. But the dollar's longs are starting to crowd into the dollar, is the point that I want to make. And counter and inversely, they're crowding into shorts in the euro. And we've had
right.
about 11 straight losing weeks in the euro. So
Look at that. I don't think I've ever seen an oscillator remain at 100 for, that's like 2 weeks or three
look how
weeks.
long it was at zero.
Yeah,
Like
that's
it's
true.
just it's
That's true. I think
very,
go ahead.
very rarely will a market get crowded right away and then just reverse.
Right.
Sometimes it's usually a gradual buildup, especially when it comes to FX, which is why I'm a little bit hesitant
Right.
that the
That's what I was
dollar
about to
will
ask you.
immediately reverse.
Yeah,
Like,
that's what I was about to ask. Do you think the dollar might show some similar, like, or will inverse to what we're seeing here at the euro, but similar in the sense that it's not just like straight in one direction. We see a little bit of like a slower bleed, rather than just a sharp move. Because look at how long that oscillator was at zero, like you pointed out, and look how long now it's been at 100. I could see that same case being made for the dollar now.
yeah, yeah. I mean, it's possible. Like we don't know, right? We don't know.
Yeah.
The only way we can really approach it is say, okay, it's very crowded on a relative basis. Now, let's look for a point where maybe some news happens, or we have a point of defined risk, or there's a correlation failure, all the stuff that I talk about pretty regularly. Then we can determine whether or not it's viable to risk 70 basis points or 50 basis points on a trade. If it's not, then we'll just wait or look for something else. But I do like what we're beginning to see in terms of a sell-off in crude oil, and seeing it's breaking its correlation with the DXY. That's pretty significant. In my mind. But yeah, I just we'll see with the dollar. It's in kind of an unusual place right now.
Yeah, it really is. And you had mentioned Coinbase, and I do want to just ask you a quick question about Coinbase, because I know a lot of people in our community have been talking about it. Um, I myself too am interested in perhaps purchasing Coinbase, and we had been talking about that 20 period smooth moving average being a pretty significant hurdle for it to get above. Now that it's above that level, let's say hypothetically you were flat. Um, how do you feel about entering that position today as we're above the 20 period smooth moving average?
Well, actually, we're back below it now, but
Oh, that was long lived.
we're still up on the day. Coinbase is up about 1% after being up to start the day 5%. So, yeah, I probably wouldn't buy it if it's going to be closing on its lows here today. I still hold some just as like a long-term play that I don't really trade or touch. I love to go back to the statistic of deceased people and their brokerage accounts outperforming. Um,
That's when the stat of the month for sure.
that's the real edge. That's the real edge.
It's the real edge. Put yourself into a coma and just don't do anything. It's true hodling. But I mean, yeah, what are your thoughts on like if you were flat Coinbase, this Bitcoin price action, given what we saw over the weekend, given what we're seeing today, potentially a turnaround Tuesday for Coinbase and we rip to the upside. What are your thoughts on that?
Short term, I think I have the same view on Coinbase as I do on Bitcoin, which is pretty much very similar to yours, which is like, we can grind higher here. I don't know. I don't know if it's like a high probability long in the short term. Like it's not something I would go out today and buy like call options on, but it's something that I feel comfortable holding for like the next few months. I've said it, and I want to be very clear. Like I think that currently I am positioned for the 4-year cycle in Bitcoin to continue into 2024 and 2025. If the equity markets and crypto and Bitcoin don't pick up by like February of next year, then I have to, seriously consider that thesis. And I think sometimes, obviously, this is a risk management thing, but it's, the time that it takes, I think, to shake people out or for, new market entrants to come back in is sometimes like the time factor of capitulation is just as important as the actual price aspect of capitulation. So I'm thinking if February, if things don't kind of turn up in coin, might have to reevaluate that thesis. Shorter term, it's tough. Like we're being rejected at resistance. I'd have to wait to the close. If we close above the 20 smooth moving average on the daily, then I'd take a look. But I mean, it's hard for me to talk objectively about this position because I own a lot of it. And it's hard to separate like the long-term holding from the shorter term stuff, but that's kind of where I'm thinking. What
Thanks.
do
Yeah,
you
no,
think?
I'm in the same exact boat as you. I do hold a little bit of spot, but I don't think right now is the time to be buying options on it. If anything, I agree with you. If we close above that 20 period smooth moving average today, and you don't have any exposure, then perhaps consider just buying some spot and using the 20 period smooth moving average as your defined risk, right? Because then if Bitcoin does come back to earth, that's just a small loss. But I think the upside potential for Coinbase, if it closes today above the 20 period smooth moving average, there's some significant upside potential there. I think so. For me, that's one that um, we're gonna have to see how it closes today, but could see some really nice upside price action. Now, getting to the title of today's show, Ethereum. We finally made it to Ethereum, and this surprise, surprise, buy the rumor, sell the news. Classic crypto and equities and in human psychology, right? Um, the news of the ETF hitting the market really kind of drove price higher. I think it also actually, for the first time in a long time, I think we actually saw ETH helping out Bitcoin and bolstering some of the value of Bitcoin. Now, Bitcoin's up 1.1% today. It's pulling back slightly, but with ETH, I think this is a classic example of buy the rumor, sell the news. Okay, the ETFs are gonna hit the market, yeah, but that takes time to be priced in, right? This is speculative here, people speculating about the approval of the ETF, and then the real the real move comes when people start investing in the ETF. And that's not going to be for a while, right? Because then we actually have inflows of new capital coming in. So now that like the news has happened, it's more of a slow trickle upwards. Like this happened quickly because this was purely speculative. But with the ETF on ramp becoming available, it's going to be a slower grind to the upside, right? It's not going to be this speculative burst. People are going to be, okay, the ETF's available. I'll put a couple $1,000 in. and ETH will gradually grind higher as more and more people get exposure to ETH via the ETFs. So I think that we might see a bit of a pullback here, maybe down to this range right around here at 1675. Well, this is the range that we've been talking about all week. You see it acting as resistance here, again here. I'd be very surprised if we dip below that level. That being said, it does look like we're getting a very much buy the rumor, sell the news. So that's what I'm seeing for ETH. But really, like, I'm not necessarily that discouraged. Like, this is just typical market psychology behavior. And I think in the long term, this ETF approval is a very good thing and will give people, you got to think about the people that are like 55 and above, where all the money's actually at, right? You got to think about those people. They're not just going to go buy ETH, right? They're probably using a wealth manager, and their wealth manager is probably also an older person, 55 or at least 40 years old. They're not just going to go out and buy Bitcoin or ETH. They're going to look for a more legitimate vehicle of exposure, and they're going to do so via that. So I think this could be very big news for ETH, and it would allow a particular demographic right now that seems to be cut off entirely from investing in ETH to get exposure to ETH and make it less of an altcoin and more of a a mega cap. Well, it already is a mega cap, but more along the lines of Bitcoin. I think in that sense, like in terms of mainstream adoption. So that will take a while to kick in, but I do think that overall the news that this ETF approve and it's about to hit the market, I think is in the long term very, very good news for ETH. So sorry for rambling there.
No, it's all good. I think to your point, it's important to get like specifically pension money.
Right.
Because
that's where the big bucks are at. Yeah, that pension money, like family office money, that sort of stuff. Like, it just is missing from crypto entirely. Right now, the only people that are trading it are me, you, Ryan, and Phoenix.
Yeah, there's no like natural flows into
right
crypto as there are to equities.
Right. It's not like in like going back to like 2020, like the start of that rally when PTJ was talking about buying Bitcoin, like that was when we had like a much more natural uptrend. And that's what I'm looking to see. That's what I'm waiting.
Yep, giving everybody $1,200 was very natural. Create a very natural uptrend, authentic rally.
Hey, really. At least there were actual dollars being pumped in. It wasn't just like
here we go, actual dollars. There's another one.
Hey, if I can hold it in my hand, I consider it an actual dollar, right? And if I can go to the store and buy something with it, it's an actual dollar. But yeah, I mean, right now it feels like much of this market is leverage. Back then, we actually did have at least people putting that $1,100 to work, but it did come back to bite us in the end.
Well, we had a good run.
Yeah.
I think after a few months now, being pretty wrong, I do think that I wrote about this in the report on Sunday. I said if oil is going to top, it's probably the best chance today or yesterday that it's had over the last 3 months. And I know that might not seem like a whole lot, but nonetheless, I do think that you have both technical weakness. The consensus is that this thing is going to 100, and
yeah,
I think it's some interesting place for defined risk.
That is a really crazy looking chart.
Excuse me for just one sec.
You're good. Another chart that I wanted to bring up just quickly, on the basis of that, I mean, that oil chart looks absolutely crazy, but is XLE. Oh, whoa, that was weird. Right as I said that. I got you, Jenna. I'm reading your mind one step ahead. XLE. This thing is pulling back hard today. I mean, this is an ugly looking chart. And you know what I'm about to pull up? Livermore accumulation. Good old Jesse Livermore. There he is. But it really does feel like, you know, like this is happening. We're at this 12-point in XL. We have already hit this 12-point in XLE. That was right here, right? You get the higher high, the 10, you pull back, you bounce back up, you don't quite reach those same levels, and then you start heading downwards. So this one for me, it fits all the bills of the Livermore accumulation and distribution, and I think we're starting to see that distribution. So for me, obviously these are going to be expensive options, but maybe like a protective put strategy, or
There is there's just an inverse levered XLE ETF. I think it's NRGD, if I'm not mistaken. But if you didn't want to play options just because of the increased volatility,
yeah,
but yeah, XLE or
that's actually a great
DL.
point.
So yeah, I think this industry is, or just the energy sector is interesting pullback potential here.
Yeah, most definitely. I mean, I had to pull it back up, CJ, but I mean, the XLE chart looks literally like exactly like this Livermore accumulation and distribution. Seems like we already hit that 12 point. So this NRGD, interesting trade. Thanks for throwing that on my radar.
It's the 3x levered inverse XLE ETF.
And what I would do is I would honestly just wait for today's close, put a stop loss right there. And then you're good. If we break down below that would like devalue, that would basically invalidate this formation, and lead me to believe that we might see more negative price action. But these things tend to trend, and the volume is looking strong. So I think you're right, CJ. I think we're going to see that CL falling, XLE falling, and maybe the best way to get exposure is actually NRGD. I think I might, go ahead and take a shot if we close above that level that I marked out there today.
Yeah, there's pretty clear risk. It's interesting. I was hearing the CEO of Oxy talk about how she thinks that oil probably won't, even if it does go above 100, it probably won't stay there for very long. I mean, we'll see. Either way, I'm just looking at the positioning, and now we're starting to fall down. So we'll see if the liquidation of longs continues, because that was like everybody's favorite trade. That and TLT, which also is now making like new lows, has been seemingly everybody's favorite trade over the past 2 to 3 weeks. What is TLT down right now? TLT is down 130 basis points.
Well, hopefully,
yeah. So we'll see if long duration ends up coming back, but it's just not. The idea is not working yet. What are you going to say? Go ahead.
I was just going to say, hopefully anyone that took that trade to the long side took your advice and, put in that stop loss, because, last week we didn't have any, that was a straight up falling knife, and it was falling quick. We did get a little bit of a bounce. But hopefully people cut it at that level. You talked about how like at least there was a setup and like a reason for buying TLT like towards the end of last week, right? You had defined risk, you had a decent setup, possible mean reversion, didn't get it, got invalidated. You should be out of that position in my mind if you entered it late last week. So that's really all I gotta say about TLT.
Yeah, like there's Wall Street has no shortage of brilliant people who can come up with very sophisticated and convincing fundamental arguments about why the long end of the curve should steepen, or why, longer term interest rates should go up and TLT should go higher. But until the market actually proves that you're right, yeah, it's just not it's not working. And this is one thing that I didn't talk about that we could go into, but I'll just probably touch on, is that we still continue to see a lot of retail buying into the fixed income assets, things like ZN, ZT. And they just keep going down. So that's just kind of concerning. for those assets. It doesn't, you would want to see retail be shorting and then look for a place of defined risk and then buy it. But that's like the opposite behavior is what is being demonstrated by the market participants.
Yeah. Yeah, we are not getting that behavior that you'd want to see.
And then EDV is even the
Yeah.
extended duration ETF
Yeah.
that's getting hit even harder.
How about Riot, CJ? Up 12.5% today.
Nice.
Here's what the chart looks like. I mean, with this one, okay, of course it's up because Bitcoin's up. Not surprised. It was also, like we talked about last week, one of the most heavily shorted stocks in all of equities. And lots of those shorts were forced to cover today as Bitcoin made a nice move over the weekend. Now, will this be sustained? I don't know. This level of 9.85 is kind of where I've drawn the line in the sand. Anything below that is pretty discouraging. But what I will note is the volume, right? I want to emphasize the volume. And actually, going back real quick. Sorry, I'm kind of getting schizophrenic here. Look at this nice buildup in volume in NRGD. There's still 5.5 hours left in today's candle, but like overall, starting from like the bottom of this move, this has been a really nice continued uptrend in volume. So like that's what you want to look for. But getting back to Riot, what I want to see today, like this is not a great looking candle at all. What I want to see today, or what I'd want, how I would play this, is if we close today looking anything like this, or if we close today with kind of like a doji-ish candle, wait for maybe a retest of this level. If it bounces from this level, then you can buy in, right around here. But if it breaks down through this level, then it basically invalidates my thesis and we see it come down. But based on what I'm seeing from Bitcoin and based on what I'm seeing from the markets in general, I'd be surprised to see it come back down below 9.85 and buyers not step in. So that's just something to watch out for. I think this is one that you could plausibly play to the upside, not today, but this maybe later this week if we get a bounce from this level of 9.85 and some continuation to the upside. I think $12.35 is a very nice target where we kind of bounced on the back of that ETF news. So that's what I'm seeing from Riot. I mean, obviously, when you're dealing with something that's up, now it's only up 11%, but volatility is going to be very high today. Premium paying for options is going to be very expensive. Give it some breathing room. Give it some time. Monday is a day of reflection for a lot of people, and I'm sure we'll see it settle down here a little bit as the day progresses. Oh, can't hear you.
It'll be interesting seeing how that ends up. But
Yeah.
don't forget to like and subscribe. Great way to support the show if you did enjoy the content here today. Also, don't forget to check out tradethechain.com for 14-day free trial, access to Monte and I's Discord with Nick, Alex, and some other analysts. Dougie, can't forget that. But hope you guys definitely join. We'll see you over there, and really appreciate all of the participation this week in comments. So we'll see you guys back here same time tomorrow.